Welcome back. The topic for the day is sensitivity analysis. Now, just assume that you are going to start a business next year. So, you've made all your projections and you expect a profit of $100 in the first year. But you know that the future is uncertain and this profit may fluctuate. But whatever be the case, you don't want to incur a loss in the first year. The minimum profit that you need is zero. That is, you don't want it to go below zero. That is, you don't want to incur a loss. So what have we just seen? Our original projected profit was $100 and the maximum dip in profit that we can afford to bear is up to a profit of $0. That is, we do not want to incur losses. So the $0 is the maximum limit up to which the profits can fall. When the sales dropped by 50%, our original projected profit of $100 fell to $0. So this 50% is known as our decision's sensitivity to units sold. And what do you mean by sensitivity? The maximum percentage change that is acceptable to us to implement our decision. And what was our decision? Our decision to start a new business without incurring losses in the first year. Now we know that the estimated profit of first year is $100. And the minimum profit acceptable in year one is $0. Now, this profit can fluctuate from $100 to $0 because of multiple factors. And these factors are known as variables. There are mainly four variables. One is the sales in units. The second is the selling price. The third is the variable cost per unit. And the fourth is the fixed cost. If the sales in units and the selling price drops, then definitely our profits will also reduce. And the expenses, that is, if the variable cost per unit and if the fixed cost increases, then again our profits will reduce. Right now, we saw our decision sensitivity to sales in units. We could also calculate the sensitivity to selling price, the sensitivity to variable cost per unit, and sensitivity to fixed cost, wherein you will get what is the maximum percentage change that is acceptable to implement our decision. What is our decision? Our decision to start a new business without incurring losses in the first year. So basically, you're trying to find out how much all these variables can change, or what is the maximum percentage change that we can afford to bear without suffering losses in the first year. So we have understood that sensitivity analysis calculates the maximum percentage change acceptable to implement our decision. Now, the main features of sensitivity analysis are only one variable is changed at a time. Now, there are many variables like sales in units, the selling price, the variable cost, and the fixed cost. Now, whenever we are trying to find out the sensitivity to sales in units, all the other variables will be assumed to be constant. So that is the meaning of the sentence. Only one variable is changed at a time in sensitivity analysis. And risk is better understood. Why do you say that risk is better understood? Now, just now we saw that if the sales in units fluctuates by 50%, then we end up with a profit of zero. In this case, it is not very risky because the chances of a 50% fluctuation in sales is not very likely. But if the answer was, say, a 1% drop in sales has resulted in a loss, then immediately we have to understand that the project is very risky, because there is a high chance that the sales will drop by 1%, but the chances of the sales dropping by 50% is quite low. So that is the reason why it is said that sensitivity analysis helps to understand the riskiness of the project. Probability of change is not stated. What do you mean by probability of change? Though we know that when the sales drop by 50%, the profits will be zero, we don't know the chances of its occurrence or the probability that the sales will fluctuate by 50%. That is not known. We just know that if the sales fluctuate by 50%, we will end up with a profit of zero. The probability is not known, or the probability is not found out in sensitivity analysis, and it does not point to the correct decision directly. It just says that certain projects are risky and certain projects are not. Maybe the riskier project will have higher profits. So sensitivity analysis will not say that this project is better than the other. It will not say that. It will just say that this project is riskier, this project has got lesser risk. That is all. Now, knowledge of the features of sensitivity analysis are required for tackling the multiple choice questions. Now we will go to the questions involving the numerics. Question number 1, you plan to start a business without suffering losses in year 1. Projections of year 1, $8. Sales 100 units, selling price $10, sales is $1,000, minus variable cost $800, we get a contribution of $200, minus fixed cost of $100, the profit of the first year is $100. Calculate our decisions sensitivity to A, sales in units, and B, selling price. So we will tackle the first part, A, that is sensitivity to the sales in units. So this is the same thing that I showed as visuals. Now, what is given in the question? Without suffering losses. That is a maximum limit of our present decision. What is our present decision? To start a new business without suffering losses in the first year. So right now we have projected a profit of $100 and we don't want to suffer losses in year 1, which means that the maximum limit is profit is equal to 0. We cannot go below profit is equal to 0. That is, we cannot incur losses. And here if you see, $800 is a variable cost. And what is the number of units? 100 units. So what is the variable cost per unit? Variable cost per unit is $800. That's the total variable cost divided by number of units, that is 100. So that's what I've written here. So the variable cost per unit works out to $8 per unit. And coming to contribution, contribution is $200 and that's also for 100 units. So what's the contribution per unit? It is 200 divided by 100. So that's what I've written here. So it is $2 per unit. Now coming to the sensitivity to sales in units, I had showed the visuals earlier. Now we will see what is given in the question. Now if you see here, the projected sales in units for the first year is 100 units. So that is what is written here. Okay. And what is the projected profits for the first year? That is $100. So that is what is written here. And what is our maximum limit of our present decision? That is profit is equal to 0. That is, we can go down up to profit is equal to 0. Now, what do you mean by sensitivity to sales in units? What is the maximum percentage of drop in sales in units that is acceptable to us? So in order to find out the percentage of drop, we will have to find out the number of units up to which sales can fall. And only then we can find out the percentage of change. So that's the second step. So first we will tackle this. We will try to find out what is the number of units that we have to sell when profits is equal to 0. So that is step 1. So for that, we have studied the basic format in marginal costing. What was our basic format? Sales minus variable cost gives contribution, minus fixed cost gives profit. So what are we trying to find out? We are trying to find out the number of units to be sold when profits is equal to 0. So we will first write profits is equal to 0. And what are the variables that we got from the question? Sales, we know from the projections, it is 100 units. Selling price, we know it is $10. Variable cost, we know it's $8. Contribution, we know it's $2. And fixed cost, we know it is $100. So this is as per the original projections. Now, what are we trying to find out? We are trying to find out the sensitivity to sales in units. So I said in the features of sensitivity analysis that whenever we try to find out the sensitivity to a particular variable, only that variable will change. So in this case, the sales in units, we don't know. That is X. All the other variables will remain constant. It will not change. So we can substitute all the other variables into our basic format. So for sales, it is X number of units multiplied by $10 because $10 is the selling price. For variable cost, again, the number of units we have assumed it as X and the variable cost per unit is $8. And for contribution, again, the number of units is X and the contribution per unit is $2. This is because the only unknown is the sales in units. All the other variables are assumed to be the same. And what about fixed cost? Fixed cost is also assumed to be same, so that is $100. Now if profit is 0 and fixed cost is 100, then what is contribution? Contribution is fixed cost plus profit. So it is 0 plus 100. We get $100 as the contribution. So we have an equation here. X into 2 is equal to 100. So what is X? So I'll just write that. 2x is equal to 100. That is x into 2 is equal to 100. That's coming from here. And x is equal to 50 units. So we know that if we sell 50 units, then we get a profit of 0. Now, you people might be wondering, why did we take so much pain for drawing all these formats just to find the break-even point in unit? Because what we have just found out is the break-even point in unit, the number of units to be sold when profits is equal to 0. What is the formula for break-even point? It's just fixed cost divided by contribution per unit. We already had the fixed cost 100 divided by contribution, that's 2. So we get 50 units. So why draw all these formats? You might be wondering. But why I drew this format is because sensitivity analysis may be asked not only for sales in units. It might be asked for selling price. It might be asked for variable cost. It might be asked for fixed cost. So this format will help you at that time. If it is only sales in units, agreed. You can go in for that direct formula, find out the break-even point in units, fixed cost divided by contribution per unit. Agreed. Otherwise, this format will help you. So coming back to our answer, even if the sales drop from 100 units to 50 units, we can still implement our decision. So what is a maximum permissible change, or what is a maximum percentage of change that is acceptable? How do we find it? The change is 100 minus 50. So 100 minus 50, that's again equal to 50 units. So 50 units is the maximum change. So as a percentage, if you have to express, it is 50 divided by 100 units. That's the original units. So we shall write that. Sensitivity to sales in units is given by the formula change in units divided by original units. We're just calculating the percentage. So the change in units is 50 units. That's coming from here. The original units, 100 units. That's coming from here. So you get the answer as 0.5. Expressed as a percentage, we have to multiply it with 100. So 0.5 multiplied by 100, we get 50%. So only if the sales falls by more than 50%, we are in the soup. That is, we will end up in a loss. So the final conclusion is, if sales in units drops by more than 50%, our decision of starting the new business will have to be reversed. Now, moving to subpart B, that is, we have to calculate the sensitivity to selling price. So in this case, the facts of the case are same. Whenever we are calculating the sensitivity to selling price, we have to take the selling price to be X. All the other variables will remain constant. That is, sales in units will be taken as 100 units. Variable cost per unit will remain at $8 per unit. Contribution per unit will not remain at $2 because selling price is going to change. So we cannot take contribution as $2. And the fixed cost is also assumed to be the same $100. So we shall write the format. So sales minus variable cost gives contribution, minus fixed cost gives profit. And our maximum limit is where profit is equal to 0. So we have to calculate the selling price when profit is equal to 0. So we write profit as 0. Sales is 100 units, that's coming from here, multiplied by X, that's coming from here because that's the assumed selling price. Variable cost, again, it's 100 units multiplied by $8 per unit. So we get $800 as a variable cost, and fixed cost also remains same at $100. So now we have to find out the selling price when the profit is equal to 0. So we will start working backwards. Contribution is fixed cost plus profit. That is, fixed cost is $100 and profit is $0. So 0 plus 100 gives $100 as a contribution. And sales is equal to the contribution plus the variable cost. So it's 100 plus 800. We get $900. So now we have an equation here. 100 into X is equal to 900. If 100X is equal to 900, then what is X equal to? X is equal to 900 divided by 100 or $9. So $9 is the selling price at which the profit is equal to 0. So how do we calculate the sensitivity to selling price? Sensitivity is nothing but we have to calculate the percentage of change. So the percentage drop is from $10 to $9. So what is the change? It is 10 minus 9, or it is equal to $1. So sensitivity to selling price is change in selling price. That's 10 minus 9. That's 1 will come in the numerator. And original selling price, that's $10. That's coming in the denominator. So we get the answer as 0.1 to express as a percentage, multiply it with 100. So we get 10%. What does this mean? It means that if the selling price falls by more than 10%, then we will end up in loss. So let's write the final conclusion. If selling price reduces by more than 10%, our decision of starting the new business will have to be reversed. So as a summary, the sensitivity to sales in units is 50% and sensitivity to selling price is just 10%. Sensitivity to sales in units is 50%. That is only if the sales in units drop by more than 50%, we are in a soup. But if the selling price drops by just more than 10%, then we are in soup. That is, we will end up in a loss. So it is a critical factor, or we are at a higher risk because of which factor? Because of selling price. Because a slight reduction in selling price will bring about losses. So the more critical factor is the selling price. So whenever we have to find out the critical factor among these two, the lower percentage one is the more critical one. Now moving to question number 3. A manager is considering a make or buy decision. A make or buy decision means whether to make the raw material or to buy the raw material from outside. If the raw materials are made in-house, then the variable cost is $12 per unit, and the ultimate selling price that you get for the final product is $15. So what is the contribution that you get? It is 15 minus 12, or $3 per unit, correct? If you're making the raw materials in-house. And if you're buying the raw materials from outside, then what is the total cost? $4 is the variable cost and $5 is the external purchase price. So you have a total cost of $9. And the selling price of the ultimate product is 14. So 14 minus 9, what is the contribution if you're buying the product from outside? 14 minus 9 will give you $5 as a contribution. So the contribution per unit if you're making the raw materials is $3, and the contribution per unit if you're buying the raw materials is $5. So right now, what is our present decision? Will we make the raw materials or will we buy the raw materials? We will definitely buy the raw materials, correct? Because we are getting extra contribution if we are buying the raw materials. Extra by how much? 5 minus 3, or $2 is the extra contribution that we get if we buy the raw materials from outside. So let's make a note of it. Our present decision is to buy from outside because of the extra contribution of $2. So right now we are buying from outside because we are getting an additional $2 as contribution if we buy the raw materials from outside. Now, what are we asked to find out? We are asked to find out what is our decision sensitivity to external purchase price. What do you mean by sensitivity? What is the maximum percentage change that is acceptable to us to implement our decision? So what is our decision right now? To buy from outside. And we will have to stop our decision from buying from outside when the extra contribution is reduced to $0. So the maximum change that is acceptable to us is 2 minus 0 or $2, correct? Suppose instead of $5, if the purchase price is $7, that is plus 2. Even then we can buy from outside because then what will be the contribution? Instead of 5, it will be $3. So we can buy from outside or we can make in-house. It's the same cost. So we can continue our decision as long as the extra contribution is $0. Now we will calculate the sensitivity. What do you mean by sensitivity? The maximum percentage change that is acceptable. So in order to calculate the maximum percentage change, how do we do it? It is change in the purchase price in the numerator and the original price in the denominator. So the maximum change acceptable is $2 that will come in the numerator, and the original purchase price of $5 will come in the denominator. So it is 2 divided by 5. or 0.4 to express as a percentage, multiply by 100, it's 40%, which means that if the purchase price increases by more than 40%, then we have to change our decision. What was our decision? To buy from outside. So let's write the final conclusion. If external purchase price rise by more than 40%, then the decision of buying from outside has to be reversed. Let's have a quick recap before we wind up.